We're going to talk about Bitcoin spot trading volume, right? So spot volumes on Bitcoin's markets dramatically overshadowed the derivatives markets in the outgoing month of March. This is at least according to a new report from the analytics company CryptoCompare. Derivatives drive cryptocurrency, right? We've known this for quite a while, right? Derivatives drive cryptocurrency, but not over the month of March. There was more spot transactions. There was more spot trading in the Bitcoin marketplace, not crypto marketplace, but just Bitcoin marketplace in the month of March, which is extremely significant as that means that there was some serious spot rebalancing going on. When global financial markets were rocked with high volatility as fear, uncertainty, and doubt over the pandemic overtook the market, it unfortunately had the effect on the Bitcoin and the wider crypto market as well. Obviously, this played out with the Bitcoin derivative sector taking a hit. The spot market volumes told a different story if we analyze. Now, CryptoCompare here describes how since late March, there has been a steady rise in the price of Bitcoin when it reached the $6,000 level of support. Increasing spot volume and demand drove the price to this week's current high. And at the same time, volumes on derivatives exchanges were floundering, right? Again, so just to make sure we're very, very clear about that, what that means is that there was more individuals watching Bitcoin's price saying, man, they got the SPY, they're looking at the SPY, they're looking at Bitcoin. Looking at the SPY, looking at Bitcoin. And they're like, what's that hotline bling meme, right? You do the hotline bling meme. And they're like, okay, I got to get me some of this Bitcoin. Spot Bitcoin. And if we look at the charts, we can see, let's see, do they? Yeah, so if we look at the charts, these are provided by Skew in this article. Looking at the charts, we see open interest and volumes for the CME Bitcoin futures market declined sharply after the flash crash toward the end of March. And if you were wondering about Bakkt, a similar trend was also noted in their volumes on Bitcoin futures derivatives markets. Now, apparently, or obviously, I should say, this indicates increased interest from retail investors, with Coinbase, for instance, having recently revealed that their brokerage metrics showed retail buyers were buying in hard during the March crash, and that Bitcoin was without a doubt the crypto of choice amidst the chaos, right? As everything was tumbling, where did individual investors turn to? They turned to Bitcoin, and Coinbase's metrics and Skew's metrics, these all point to the exact same thing. Coinbase said that they typically see customers on their platform purchasing about 60% more Bitcoin than they sell. However, so again, Bitcoin is extremely bullish. You know, even by default, they said that on average, retail buyers buy 60% more than they sell. However, during March, and the price dropped across all markets, this figure jumped to 67%, describing it as customers taking advantage of market troughs and showcasing strong demand for this crypto asset, even during extreme volatility. This is in contrast to institutional money, which seems to have shied away from the big derivatives platforms available on CME or Bakkt. In fact, CryptoCompare says that its data shows that trade volumes on spot exchanges surged in Q1 of 2020, with the majority of new volume coming from what they termed lower tier exchanges, accounting for $54.3 billion of the measured volume, while so-called top tier exchanges totaled about $21.6 billion, right? So now, additionally, Binance was the largest top tier exchange by volume in March, trading $63.6 billion and up by 19.2%, followed by OKEX, which traded about $47.7 billion, and Coinbase trading $13.3 billion. Binance and OKEX led the spot volumes markets, but their dominance wasn't limited, however. The two platforms outperformed the long-standing leader, BitMEX, in terms of Bitcoin futures exchange volume figures. Meaning, now, obviously something that we could draw from this, right, is that, obviously we cannot deny that there was increased retail demand for Bitcoin as price dropped, right? However, one could also assume that it was BitMEX, what's the term we use loosely here, screwing the pooch with manually shutting down their exchange as the liquidation engine. We covered this before, the truth about the BitMEX liquidation engine and how that actually went down. We've covered that previously on the show. But again, we can look at where the CME markets went down. Bitcoin's price really did not want to go down below 4,000, right? Really didn't want to go down below 5,000. I mean, that's why price bounced back so hard, because it was an unnatural movement to the downside. Like, not unnatural as in like a lot of people selling, unnatural as in like you have this irrational machine that is attempting to take price to zero, and certainly will, because there's not enough money on, there's not any money on the buy side, because it takes time to clear deposits, right? Now, this report also revealed that exchanges that charge traditional taker fees constituted about 80% of the total exchange volume in March, while those that implement trans fee mining, TFM, don't get excited, people, represent less than 20% of total volume. So very, very interesting to see. A very bullish case for Bitcoin. Definitely a bullish fundamental, guys. So let me know down in the comments section down below, were you guys logging on to Coinbase furiously as you saw price drop below 5,000 saying, I got to get me some of that? Or were you logging on to Coinbase furiously to say, I got to get out, I got to get out, I got to get out? Please let me know down in the comments section down below. I certainly hope it was the former. All right, guys.